Hi, and welcome to another episode of Brobears Talk. Thanks for tuning in. I think just before we get started, we unfortunately, but necessarily, have to put a disclaimer out there, given the nature of today's podcast. Today's podcast is titled The Silver Rush, and given the subject matter pertains to investing, we'd like to take the opportunity to disclose that we are most certainly not financial advisors, and none of our publications offer investment advice, and nothing in them should be interpreted as such. Our publications provide information and education for investors who can make their investment decisions without advice. You should always carry out your own independent research before making any investment decision. That goes without saying. Thanks. So with that, let's go.
You're on the air. Don't say anything crazy.
Good day and good afternoon, or good morning, or good evening, whenever you might be listening. Welcome to another episode of Brobears Talk. It's podcast number 7, and this week we're going to be talking about silver, the silver rush, or often known as the poor man's gold. But it's often a commodity that's not talked about as much as gold. Brother Bear, welcome to the podcast. I know you can offer many insight here from the gold angle.
Thank you, Brother Bear. Thank you, and hello everybody. I think it's going to be an interesting podcast talking about the underdog in the sort of precious metal world of where value is derived. There's so much focus on gold, isn't there, Brother Bear? But I think the focus of this podcast is going to be the underdog, isn't it? Why is silver not getting the attention it needs?
So I think typically the silver price, and looking back historically over the last century and even further, has tracked the gold price. So the silver price has broadly, traditionally tracked the gold price, albeit at a level of lag behind the gold price. So it's typically everyone gets on the gold train at times of uncertainty as a hedge against inflation. With the level of current government spending, and if that's going to continue at any level for the foreseeable future, I think people are flocking to safe havens and hedging against inflation, and gold is the obvious sort of safe haven. And I wonder whether you could just give us because this pertains, as I feel, as much to silver as it does to gold, sort of why gold has traditionally always been this safe haven and almost a hedge against inflation.
Yeah, certainly. So gold is something, sort of an area of interest. Would definitely consider myself a bit of a gold bug. I mean, the gold frenzy surrounds the fact that it has intrinsic value. It's portable, it's divisible, it's useful, and that's a lot of the useful and resourceful aspect of gold is something that most other resources or your common stock or trade cannot testify to. So no other assets or financial mechanisms can really hold a candle to gold, because gold has an intrinsic value, and you sort of look at its worth over the past 3,000 years or more, and it's always been used as a store of value, and as a store of value, it's always increased in its valuability over the years. So I think that's a good starting point with gold. Throughout times of financial adversity, from the Great Depression to 9/11, people have always bought up gold in both physical and non-tangible stocks, because again, it's that intrinsic store of value. And there's that old saying, buy gold when the money goes bad. But there's also another saying of gold, and it's sort of seen as like the fool's investment. And the reason it's seen as the fool's investment is because it's in the long term, it's such an easy purchase, because it always tends to go up, really. You buy it, and 80 years later, relative to everything around it in society, it's going to be worth a lot more. And that trend has not yet been broken until something else is discovered or comes along. So yeah. I think that gold is valuable and desirable for all those reasons. Silver is a bit of a gap in my knowledge, so would love to know more about how that relates to gold, how that's influenced by it, and why that would be a safe bet in these times.
Yeah, sure. So I think silver, much like gold, is a store of value, but that's not necessarily first and foremost. It's also got a number of industrial applications. So that includes sort of microchips, RFIDs, which are used in tracking. Not to say that gold doesn't have much in the way of industrial applications, but I'm not sure it's to the same extent as silver. And you're seeing a lot of upside in silver in terms of industrial applications in solar panels as well. So there's that aspect to consider as well. And we'll go into that aspect as well as to how that industrial demand picture actually has shaped the price as of late, and often maybe explains why there typically is a lag. So kind of silver follows gold, but at a sort of there's a number of months or even years whereby the price doesn't quite reflect the same trajectory gold has gone on. So silver has particularly come to my attention over the last few months because sort of since 2014, it did peak after the subprime mortgage crisis 2008 to 2011. I believed it did peak in 2011, and that was sort of the all-time high prices, which we'll go into later. But silver was up nearly 25% in the month of July 2020 alone, and that represents the metal's second biggest monthly gain on record going back forever. Wow. And so, yeah, and past performance in terms of silver, which is what I've just discussed, has been fairly sort of consistent indicator of illustrating that silver prices generally, although they lag behind the performance of gold over the long term, and if you follow that trajectory through, outperform gold in terms of the percentage gain, particularly in times of recession, and more so exacerbated in times of depression, which is what we've discussed in the past we might be entering or already in. So there's a very interesting disparity that's occurred as of late, and I think it's something that's fueled this almost exponential increase in the silver price, is the relative abundance of gold to silver, so the gold to silver ratio. So the price sort of over the last, I think it hit its record highs back a few months ago. So the price has become increasingly divorced from its relative abundance in the Earth's crust in recent years. So silver, in terms of the Earth's crust, is something like a 1 to 12. So for every one part of gold you find in the Earth's crust, you're going to find 12 parts of silver. So that's the rough ratio in the Earth's crust. And in fact, it's fluctuated. And sort of the latest estimates put it around 18 to 1. Either or, it's around that sort of mark. In 1792, the gold price ratio was fixed by law in the United States at 15 to 1. So that kind of meant that 1 troy ounce of gold was worth 15 troy ounces of silver. And that was also enacted in France in 1803. However, if we look at the average over the last 20th century, that's been about 47 to 1. So the price you'd pay for 1 ounce of gold, you could get 47 ounces of silver. And that ratio of the last 20 years has increased from 47 to 1 to 60 to 1. So ratios are quite an interesting sort of lens to look at these things. And so the current ratio, which stands at 74 to 1, is historically very high, and 60% above the 20-year average we just mentioned, 60 to 1. And so this suggests, at least, that silver as a commodity is extremely undervalued relative to gold at this point in time. In fact, it was at an insane height of 126 to 1 in the middle of March this year. But like I said, it's since fallen to 74 to 1 as a token of the price, which has gone somewhat sort of exponential over the last since March 2020.
And what do you think are the underlying causes of that change in value? Do you think it's the industrial demand? Do you think it's the pandemic? Is there a root cause of that change?
I think it's investors, both institutional and retail, sort of missing maybe, or get the feeling that they're missing on the gold train, and so jumping on the silver train because they think it's going to go through a similar trajectory, and historically has done. So history's on your side there. And if you look back at sort of historical silver rushes, if you like, the all-time high for silver was in the month of January in 1980, and that was at $49 $49.50 per ounce back then. It's currently at $27.70 per ounce. So that suggests if we're going to see anything like what we saw in 1980 in terms of a recession, or even something worse than 1918, something more akin to a depression that we saw in the 1930s to the 45 period, then there's a high likelihood that it will exceed that all-time high of $49 per ounce. However, people worry gold's already hit its all-time high. In fact, that happened 2 weeks ago. You missed the memo because it happened on August 6th, just under 2 weeks ago, and it hit $2,000.70. It's since pulled back, so it's now sitting at about, as of 30 minutes ago, I just checked, it's sitting at $1,986 per ounce. But it's interesting because what people speculate is that looking at the historical record, silver will undergo a similar trajectory, albeit a delayed one. And so it's kind of people who missed the gold train are jumping on the silver train. And what's very interesting from the gold perspective, I know this podcast is on silver, but it's interesting the sentiment of some big institutional investors, and I would say big influencers in the institutional investment space, namely Warren Buffett, has kind of changed his tact in terms of his sentiment towards gold. He's traditionally been a big critic of gold as an investment. However, if you look at its appreciation over the last 20 years, it's actually exceeded the gains of Berkshire Hathaway over the last 20 years. Wow. So he's kind of had to eat his words in some sense. And in fact, he invested in gold, and it's been disclosed in the latest investments made by Berkshire Hathaway. And this is historically very significant because he's a shaker and a mover in the investment space, historically been a critic, and now appears to be an advocate.
So he's done a complete 180 when it comes to precious metals.
Certainly, yeah, if you judge him by his actions, which I think you should.
Yeah, for sure. That's pretty interesting. And I think what's interesting about silver is sort of the lag behind gold.
Yes.
I mean, gold is clearly something that's, as of recent, gone up hugely in value. I mean, I remember a little earlier this year, and about a month ago, I was sort of chasing the value of gold and was really surprised at how much it was exceeding. The lag with silver is definitely an interesting thing to watch. And why do you think it lags, Brother Bear? Like, could you give some insight on why? Is it just because it's like your gold person's second chance, or is there another reason? Is it to do with its demand or its abundance?
Yeah.
What's going on there?
I think it's partially the fact it's followed and it's speculation fueled, in the sense that people who missed out on the gold rush, or the perception that the gold train has kind of left the station, you can still jump on the silver train. But there's also the fact that the silver market is significantly smaller than the gold market. So if you take the year of 2019, for example, the dollar value of the gold market as a whole was around 5.5 times bigger than the silver market. And so given that smaller size of the silver market, it takes less effort for investors to move the price of the metal higher or lower. And so the smaller size of the market essentially increases volatility. And so but it's not seen as safe of a haven as gold by that token. Okay. So and then there's another bit to it, which is the silver market is relatively less liquid than the gold market, both in terms of depth and breadth. So there's fewer, relative to gold, there's fewer institutional investors, retail investors, bullion banks, and trading companies interested in that commodity versus gold. And so this lack of liquidity is also why it's often second choice when compared to gold. And then sort of going on to why the lag and then eventual outperformance in terms of percentage increase is because silver, like I said, it probably has more industrial applications and uses than gold. So economic, but you've got to temper this with economic distress, which we're definitely currently seeing. And so fabrication demand for silver and products that utilize silver will be more hurt by fall in demand for any given industry that utilizes silver to any level. So that's what we've seen as of late, and global supply chains suffering as well. So from mine all the way through to end product. And then finally, sort of generalist investors sort of typically divert their attention towards silver only when gold starts to rise strongly. This is what we've talked about already. And sort of this delayed attention from generalists also tends to contribute to the lag in silver price performance relative to gold.
Okay. Interesting there. First of all, I want to say I like silver because it's almost a more accessible gold, I think, for the masses.
Yeah, poor man's gold,
always,
as they called it.
Yeah, well, exactly. Gold's always struck me as quite an inaccessible investment. I mean, even some of the smallest amounts that you can buy tangibly are usually a £200 investment if you're in the UK. So I think it's quite interesting that silver seems to be more accessible. The lag is definitely interesting, the industrial application. And I remember with gold, there was a massive boom in the semiconductor industry, and with mobile phones and pagers and other devices that required small amounts of gold coating for their production. And I remember that influencing, and still to this day influencing, the price of gold in a positive way. Is there an equivalent now that you would say that's going to be sort of stoking that increase, that sort of more bullish outlook on silver? Would you say like the renewable energy industry, or are there other devices in production that are going to help improve that value of silver?
Yeah, 100%. So I think that's a really astute point, because it's very true of the renewables. So recessions, depressions, times like this of volatility and downturn tend to accelerate, as we've talked about in the past, cutting edge technologies, whether that's sort of robotics in the IT space to sort of the energy industry as well. So the likes of even Shell, traditionally petrochemical giants, and Exxon looking to solar energy. So that's definitely going to increase over the coming years and decades. So that is a industry that utilizes silver for the creation of solar panels. And then there's RFID chips. So that's used in terms of modern applications. That's used for tracking parcels, so your Amazon and your shipments worldwide. Also semiconductors and touchscreens. So those four aren't going anywhere. And if anything, that you're going to see a significant uptick, something probably akin to a exponential curve in terms of uptake and increase of demand and supply over the coming decade. So I think that demand picture from the industrial perspective for silver is an extremely good one. And I'm not sure gold has that same robust industrial application. And although I do know it gets used, I think probably at the prices you're seeing gold at now, it's an unviable, or you'd look at alternative materials. It doesn't make much business sense to go after, especially when you look at what the price has done over the last year. And like I said, silver's not been on that same trajectory that we've seen gold go through over the last year. And so it's sort of sitting roughly about 50% of its all-time high today. And so what people are sort of speculating on quite rampantly at the minute is that it's going to do that. It's going to do exactly what gold's just done, except it's delayed. And the demand picture from the industrial side of things isn't going anywhere.
I think that's a really good point, actually, the industrial side, because when considering your investments and when looking particularly at precious metals, you've often got to look at the cost of the actual resource of the good, right? You've got to consider how much is this costing businesses to actually use in their supply chains. And you can see the cost as high and think, oh, maybe in the long term that's going to be a valuable investment. But then on the other hand, if it is so expensive to mine and apply to a particular invention or innovation, then it's not necessarily going to be that desirable long term. So I think that's...
It hits the bottom line if you're sort of using too much gold or using gold at all in your components. It's going to affect your bottom line when it comes to totting up the numbers, which is ultimately what companies are all about.
Definitely. And usability has a real impact on all this because, for example, looking at the price of Bitcoin right now, we're looking at almost $12,000. And that's a big high. We haven't had it that high in a long, long time. And I think, looking at the last month's trajectory, it's just gone up and up since sort of mid-July. So we're now around $12,000, just under that. But what's the usability there? That's the thing. Whereas when you look at something like silver, it has direct application in a whole range of like future industries, not just current industries like petrochemicals, but you said yourself in solar energy.
Yes, absolutely. And I think institutional and retail investors are both looking to safe havens at this time, because with the current level of government spending, although we're looking at a deflationary picture at the minute, but that's only taking account into that's happened in the last year, and so that accounts for a time pre-corona when the numbers are in for all of the government spending that's gone in for the right reasons. I'm not saying it wasn't, the governments weren't right to do what they had to do. It's kind of an unprecedented event, and they had no choice. But what it does mean is you don't get away with just printing more money or more virtual money, more dollars, more virtual sterling. Ultimately, that devalues currency and will potentially lead to inflation or even hyperinflation in the coming years. And so cash isn't an option. Yes. People used to say cash is king. I'm not sure that's the case anymore. Ray Dalio famously says cash is trash, and I think to a large extent he's true, particularly with when the numbers are in after all this government spending. Property is not an option because mortgages aren't out there, and lenders aren't willing to lend for the percentages and interests they used to. And also, there's a far higher bar to entry in terms of deposit up front. Third, not equities, because although we're sort of seeing the stock market go sort of into an insane parabolic exponential trajectory at the minute, it's not a reflection of where we are in reality, in terms of we're kind of being payrolled by the government for now, but the house of cards is going to come crumbling down probably within the next year or so, and I'd be very surprised if it doesn't. And so precious metals is almost the obvious option in terms of they are the traditional stores of wealth and are attractive haven and ultimately hedge against such inflationary pressures. And there's even, talk, are we returning to the dark ages in terms of a barter economy? I was listening to a really interesting podcast I'd recommend. It was a gold and silver podcast called Arcadia Economies. It's by a guy called Chris Marcus, and he had Andy Shetman as a guest. He's the president of Miles Franklin, which is like a precious metals investment company. And he talked about how there was a time, or he didn't quite remember that because he was 10 at the time, but there was a time in the 1980s when American gas stations were bartering gas for silver. And so you could exchange an American Eagle for a full tank or something like that. It wasn't that, but you know what I mean, essentially.
I know what you mean.
Essentially, when cash becomes so ruined, almost thinking back to Weimar Germany, where, you went into a store with your wheelbarrow of cash, and then you left, your wheelbarrow was gone, but everyone left the cash.
Yeah, that's right. The wheelbarrow was worth more than the cash.
Yeah.
Or like you could change in that cash for maybe one slice of bread.
Well, exactly. What a worthless pile of rubbish. Why don't we just burn it? Which is what they did. And
they actually did. They used it for warmth.
They did.
Yeah.
And so sort of looking to the future, I like the fact you mentioned cryptocurrency or Bitcoin specifically there, and I'm not sure whether we're ready for that, but there is a very real, I think, chance that within the next year or two, and this is kind of far-fetched from where we're sitting right here in August 2020, but I really don't feel it's that far away where the government, the Fed, would look into a digital dollar backed by physical gold and then managed via a distributed ledger blockchain. But then I'm not sure how the Fed would feel about a distributed, decentralized ledger. Is there such a thing as a centralized ledger? Is that even an option?
Yeah, is that even possible to have kind of a central node to regulate that?
Right.
I mean, I think that with Bitcoin and gold and silver, it always makes federal governments and centralized governments and parliaments very jittery, because it means for them that they lose control. Ron Paul famously said, if you're a real socialist and you want to nationalize money, you go back to the gold standard.
Yep.
Because you are nationalizing the money supply and putting it directly into the hands of the consumers, and it's democratizing the money supply.
Yep.
I think throughout life, Brother Bear, everyone sort of looks at the past with more rose-tinted glasses. Well, in my day, politicians were more noble. Now they're all liars and philanderers. But the truth is, I think that at any point in history, politicians have, especially politicians in central governments, have always been very jittery about bartering and gold and silver and these other stores of wealth because it's so alienated from their control.
Yeah,
and I think that's actually a good thing.
Yeah,
because I think that and this is why I would encourage investments in gold and silver if people can, because as you just said yourself, this is an unprecedented amount of government spending. Not that it wasn't necessary with the corona crisis, it totally was, but spending now often is a major tax in the future.
Yeah.
Through the form of inflation.
I mean, at the best of times, it's 2% a year, isn't it? And we're likely to see ridiculous inflation. And I would not be surprised if it was double digit.
I wouldn't be surprised at all if it was double digit. And just think of what that'll do to, people on minimum wage, or people, even the middle classes, and the undermining of, people may have to be working longer hours. Interest rates are going to be influenced by this. So you have to look to other means. And I think that this is a really interesting time for just sort of microeconomics and household economy, because I have seen in friends of mine that perhaps were bigger spenders prior to this COVID crisis, one, become more thrifty, but also two, look to other routes, look to things like bartering and sort of the using of things like Facebook Marketplace, and eBay and other more localized platforms. We have a big one in Canada called Kijiji, there's a lot of bartering and negotiation involved in that. And I think there's a huge uptake in that as people start to sort of tighten their belts and look for other routes.
Yeah.
I think the smart people will be looking at gold and silver, and I think silver's a big one to look at, and sort of a more accessible one that the smarter people should be looking at right now.
Yeah, I mean, we're the sewer rats, and the sewer's getting flooded, and there's kind of only one corner to run to that's dry. Because honestly, like I just said, the property's not an option. Cash is awful. It'll be worse than ever. Equities, I feel, are inflated, given, or at least sort of artificially propped up by government spending at the minute, and are only going to fall like a house of cards, apart from the disruptors and your meat and potatoes companies. So probably your Teslas will be fine, and your Walmarts will be fine. But everything else is anyone's guess. Anyway, this is just my opinion, but this is how I feel it might go. But essentially, the physical currency isn't in anyone's interest. It's costly for the government to print and create it, and in any case, it's about it represents about 10% of the overall United States. Take the United States as an example. It's only 10% of the overall country's wealth. 90% of it's all virtual dollars in your numbers on your screen. So aren't we 90% of the way to a digital dollar anyway?
Well, here's a question I have for you. What do you think about holding physical cash in larger stores than actual digital cash? What would be do you think it doesn't matter and that's sort of a moot point, or do you think that there's some sense to that?
I suppose you'd store physical cash for what reason? Because you'd want to avoid a Northern Rock scenario, something like that.
I suppose I was. You don't want to
be queuing around a retail bank when it does get bad.
I was thinking more around those lines, which is unlikely because cash is so abundant now. But is there any sense to that? Because I've heard of gold bugs doing that in the past for a greater sense of control over their own finances and their own cash that they have in hand.
I think there's always, it's probably sensible, but you have to be you have to really sort of envision quite a doomsday scenario where cash becomes a thing you sort of look to have, or at least £500 or £1,000 just to kind of help you. But I don't know, when it comes to hyperinflation, your money will be worth that much less. So wouldn't it make sense to put it into something that would retain its value more easily? But yeah, it's interesting because kind of it's funny how Warren Buffett's made a U-turn on gold. He used to describe it as you dig up this gold in Africa that was already there or wherever, and then you basically put it in vaults in America and London or New York and London, and then you put it under lock and key and a guard, and then what have you done? You've not created anything. You've just transferred the metal from the earth and put it in a vault and put it under lock and key and a guard. Or how is that asset appreciating? I think it probably needs its own podcast, but it's an interesting one, and that was kind of the basis of his argument against gold as a long-term investment. But he's since changed tact, and I think this will be potentially the first wave in a tsunami of institutional investors looking at gold more favorably, because it really, although we're looking at all-time highs 2 weeks ago, this is really significant. It's still not, the big boys still aren't in town. Warren Buffett's almost kind of the first to disclose that, or Berkshire Hathaway are the first to disclose that they're in there. They're in with the precious metals. And it's kind of, everyone else is yet to pile in, so God knows where the price could go. And then to think silver's only halfway to its all-time high of 1980. It's anyone's guess. Look, it could invert and completely go the other way, and the dollar will be fine, and the Fed will do everything it can to bring the dollar back and reduce inflationary pressures. But there's another thing to factor into all of this, which is unemployment, and how that's going to factor into this picture. And it's likely to be double digit. In fact, it was. And when the furlough schemes, whether you're in the UK or whether they use a US equivalent, come to an end, there's all that latent labor, which there won't be an uptake for all that latent labor, because the economy would have shrunk by the same proportion, if not more. Yes,
you'll have a sort of a retraction, a contraction, I suppose, of the economy.
Yeah.
And the market, it's probably going to be very saturated with with that labor just lying around.
Yeah, you'll have an overhang of latent labor, and that overhang will collapse. And so how do you fund that labor going forward? And you can't discount a second wave. So I think, like we said in previous podcasts, until we have a vaccine, I think that will shore up the markets in general. But that's not to say we've not really seen, there's not been sort of a huge amount of growth since 2011. There's some argument to say that it's kind of been the tech cutting edge that's kept us afloat up until now. But the economy's sort of not grown in a big way in real terms as it has done in the past, in the 90s and the 80s and the 2000s.
Not in sort of a... I suppose the difference now with economies in the Western world is they're so much less diverse in terms of their industrial portfolio.
Yep.
You've got the tech companies, as you say, that are keeping us afloat. But beyond that, there's really not a lot of production and growth aside from countries perhaps like Japan and Germany.
Yeah, we need to go back to making things, which is what holds countries like that up. I mean, Germany never let go of its manufacturing base, similarly in Japan. And so we've got to do that in the Western economies, apart from Germany sharpish, or else face extinction and probably be superseded by the likes of China and India. But that's for another time. Brotherly Bear, thank you so much. This has been a short, sharp shock and an interesting...
Short and sweet.
Yes, short and sweet. Silver, the poor man's gold. I hope you enjoyed that. Brotherly Bear, thank you so much.
Thank you so much, Brotherly Bear. I learned a hell of a lot on this podcast, and I'm very much looking forward to our next edition of Brobears Talk.
Pleasure and honour. It's the Englishman's Guide to North America next. We'll see you then. Thank you very much.
See you then.
Over and out.
Pow! Over and out. Pow!